getting started off with the economic calendar. As you guys can see, Monday we don't have any news. Tuesday we have 10 a.m. consumer confidence. And something with consumer confidence, this is probably the worst news event that is a red folder. Like this news event, I personally don't even trade the day that I see this news event. If you go back and look at every single consumer confidence in the past, you will see that price generally is extremely consolidative and not high probability whatsoever. So, Tuesday, if you do decide to do something, just be very cautious. Wednesday, we can see we have FOMC, so we can expect majority of the volatility to be on Wednesday for the week. Thursday, we have 8:30 a.m. red news folders, so this will be high probability. And Friday, we also have red news folders, which will be high probability. So Wednesday and Thursday, we could expect these 2 days to be the high or low of the week. And then Monday and Tuesday, we could see that form our weekly accumulation. So now getting started, we are looking at the NASDAQ and the S&P. We have the NASDAQ on the left, the S&P on the right. We are looking at the daily time frame. Now, we had this high marked out last week, and we just barely reached into it. Now, I do still think that this high is the draw on liquidity. I'm not abandoned this high yet, so I still have it outlined, as well as these relative equal highs on the S&P. Now, looking at why we dropped at the open. So as you can see, we have this massive gap that literally just formed. And the reason why this formed is because of real world news. So if you go look at the news, I believe it was 2 to 3 hours ago, something like that, right before the market opened, there was some news that happened in the East. And things of that nature can cause price to do this. And whenever this happens, just wait. So periodically from time to time, just check and see what real world news is going on, and always wait for the opening price of Sunday before you do any analysis. Because if you would have saw that, oh look, we have a bullish SMT right here, like this, and then had like a limit order or something out there, then it would have gotten either gap through or would have got hit, and then bam, immediate loss. So what we would like to see now is just stabilization of price, and then we could probably see a weekly or daily SMT form, which will expand higher, taking out these unsymmetrical highs that we formed that caused the downside movement. So looking at the Forex triad, we have the dollar, the euro, and the pound. Now, since we have that weekly TPD right here, we could expect to see price continuing what it's already doing in motion until something equal or greater to or greater than forms to cause a reversal. So we're likely to just see continuation of the move that we already have going on. So you would look for bullish PD arrays to support price for the euro and the pound, and bearish PD arrays to support price for the dollar. And now we can do some Q&A. I'm in longs. Okay. I'm just waiting for the market to get high probability again. Even though we've been pretty accurate this month, it's still just a yucky market. Lagging a little bit. Am I good? Is there any specific source you look at for news? No, you can just go on Google and type in world news. But I know for Apple News, there are some filters to where you can filter out all the unimportant things and just look at like mainly just war news, because that's what will really drive the market. Do you know any ways to prevent leaks? We are working on it. When do you think things will clear up? Probably the second week of February. That's whenever things will become a lot more cleaner. Because even this run right here, which we knew to be bullish, this run, but even on the way up, it was just very stagnant. Are you introverted? The way I talk to you guys is completely different from the way I am outside of these charts. Try to keep it very professional with you guys. Can you tell me how to approach each day with the news for each time the news comes out? Because do you ignore SSMT ahead of 8:30 news? Yes, generally, if there's a sequential SMT, unless it is confirmed, and you guys already know how to confirm it, unless it is confirmed, I will generally ignore it, wait for the news to come out. If the news does happen to distribute the SMT, then you can just wait for a fair value gap to form, wait for price to drop back into that fair value gap, and then play off the continuation. Or whenever the news comes out, you'll see another run form or another SMT. Can we see your executions from this week? The week just opened. From last week? Last week, I was going to show you guys if it hit the full take profit because it missed it by a hair, but down at this drop right here, remember how I said that there were cracking correlations between new week opening gaps? I told you guys to watch out for that gap that was right there. Whenever the NASDAQ dropped below, I think I got in like around here, was long, and then rode it all the way up. And I can make a post about it later. Could you please explain the universal model? Yes. And it was in the back. Well, I kind of hit it in the Back to Basics series, but I'll make a probably this Saturday. I'm either going to do. It's either going to be that or a deeper dive into the economic calendar. But yeah. The universal model is whenever you have an SMT and then price expands and it forms a fair value gap and a breaker overlapping each other. Whenever you see this, this has like a, oh my goodness, like I would say 85%, 90% win rate. If that sequential SMT is there, and especially if that sequential SMT is confirmed by a TPD, and then you have this, it's game over. But I'll probably make a more in-depth video about that. But I do have a model that will teach you how to get down in here. and also how to higher probability know how to navigate within fair value gaps. How often do these occur? Like, I would say it's there probably. It depends on the cycle. It's there frequently on the microcycle, but throughout the week, like day to day, you could probably find 2 to 3 of these a week from the 90-minute cycle and higher. What do you have anchored for premium and discount going into this week? Previous week's high and low. Can you explain what a breaker is, where and how it forms? I already did in the Back to Basics series. The yearly cycle SMT only happened on the YMH 2025 contract and not the continuous contract. That's why we reversed, and I missed it because I watched YM1. What charts should we look at? You should always look at the expiry charts. So what do I mean by that? If you type in NQ, you'll see NQ1. We'll just take the NASDAQ for example. NQ1, this is pretty much, let me see if I have, no, I don't. This is pretty much all of the data since the beginning, whenever this came out. So I'll show you all the data. This is kind of like every single expiry contract put into one. So this mimics the real data, if that makes sense. But what it's really mimicking is the expiry contract. So as you can see, you have the H, the M, the U, the Z. The H contract is the March, the M is the June, the U is the September, the Z is the December. And each one of these are 1/4 of the yearly cycles. That's one easy way to remember it. So it expires in March for the March contract, the June contract expires in June, the September contract expires in September, and the December contract expires in December. So as soon as a new quarter opens up, you can expect a new contract. And this is the one you should be looking at because this is the real data. This is the only tradable one. At what month will we learn how to best anticipate TPDs in depth? Probably in February. I'll teach you how to actually navigate TPDs because there's an entry model with TPDs that it rarely fails, and you pretty much catch the high and low of every move. It's crazy. When is the supplementary lesson for premium and discount? It'll be coming out shortly. Higher time frame sequential SMT, then we look for lower time frame sequential SMT in the next immediate quarter. If not the immediate quarter, then it means it's low probability, or analysis is simply wrong. Low probability. So you want it to be like immediate. I didn't quite understand your explanation on why the Dow was not in sync with the NASDAQ and S&P on Friday. Can you explain that? We can look at it right now. And we'll use premium, and we'll use a real-time example from what I've taught you. So if we take the previous week, high and low, and measure that out in premium and discount, we can see number one, currently the NASDAQ is the only one that's in discount. The S&P and the Dow are the only ones in premium. So the NASDAQ is still the weakest link for upside movement. And if we look back whenever we created that initial sequential SMT for, I believe it was Wednesday and Thursday, right here, drop to the 6 hour. We can see we had this TPD right here, and then immediately the next day, we completely blew through that high. So if we look on the Dow, if we look at the NASDAQ, S&P, and the Dow, we can see the NASDAQ was trading in discount at that time for what I highlighted, the previous range. You guys already know if you keep up with the videos. Right here, NASDAQ was near discount, and I don't know if I should even, no, not yet, that's too much. But you can see that the Dow was way, way, way above this high, while the S&P and the NASDAQ were more closely correlated. Whenever you have a sequential SMT, a high probability one, you won't see the asset that creates the Kraken correlation, that takes the higher low, you won't see it blow through it completely like that. You don't want to see that. If anything, that means continuation, and the SMT is likely to be invalid. Or you'll see something like this, where it stayed stagnant, and even after the S&P was created, it still wrecked people that were trying to be short before the real move. So high probability SMT will be more so like what we saw between the S&P and the NASDAQ, instead of the Dow, where it just immediately blew straight through that high. And that's how you could have known that the Dow was out of sync, because it was trading all the way up here. If we focus on this high in specific, the Dow was trading way, way, way above this high, while the S&P and the NASDAQ were more closely correlated. So does that make sense? Can you tell us your full story on what got you into trading and hardships during your journey? I was 15 years old, working a job that I did not like, and I thought, there must be a way out of this. I can't do this for the rest of my life. And then I was scrolling on social media one day, found trading, and was like, yep, I don't care what it takes. This is what I'm going to do. I know nothing about it. I know I'll find a way. And then 3 years later, here we are. How many entry models do you have? For you guys, I'll share 2 new ones that work really, really well. But how many do I have personally? Oh my goodness. I was the type of person to where I had to find out everything. I have many. But they're all based off of pretty much the same thing. Once I know when the high or low is established, higher low of the week, higher low of the day, once it's established, then any of those entry models, that's what I'm looking for. Will you drop TPD Part 4? TPD Part 4 would just be redundant, because I've already given so much with that concept. And if anything, the core content will be adding on the base of TPD. And once the entire core content series is released and you go back and watch those TPD videos, you'll be like, wow. Do you ever look at volume divergence? No, I don't believe in volume. If volume was real, then we wouldn't be able to call high and low of the week beforehand, and also we wouldn't be able to call price beforehand. And also we wouldn't know what times SMT should and shouldn't form. Do all assets have to trade below the true opens when looking for buys, or should it only be the asset that took the low when forming the bullish SMT? It only needs to be the asset that takes the higher low. That's the only one that needs to respect the true open rules. I thought when the turtle soup SMT asset blows through, it usually indicates failure swing asset will retrace deep for a rejection block. Sometimes, but as a rule of thumb for as a rule of thumb, generally higher probability SMTs didn't happen in this example, but if you take the wick and then you extend that out, and we're just using this for an example. Let's say we were looking for an SMT at this high. Generally, if it's like a medium-sized wick, you would want to extend that out one. So you could draw a box and then copy and paste it, and that's kind of like where you would want to see the high form. If it's a medium-sized wick, but if it's one of these small wicks, then you could do it by 3 or 4. And especially if there's a new week or new day opening gap resting above the high or low, then that's likely where you can see the high of the SMT or the low of the SMT form. That's what my eye draws to whenever I'm looking for an SMT before it happens. Is there sometimes one more run lower despite bullish SMT? Yes. If it forms before news and it's not confirmed, then news can likely create a 3 drives pattern. Why Wednesday and Thursday, not Thursday and Friday? Because FOMC majority tends to be this day, especially with Monday and Tuesday. So, and this ties into another question with the XAMD, AMDX. So we can see the economic calendar, there's FOMC on Wednesday. So we know FOMC is likely to be a very large move. If Monday and Tuesday don't have news, and if it's consumer confidence, which we've explained consumer confidence earlier on, we can see this be an accumulation, Monday and Tuesday, more so an accumulation. And Wednesday, if before news comes out, we see it form an SMT on Monday or Tuesday, then we could see Wednesday, and it expands, then we could see Wednesday be the high or low of the week. Or if Thursday reverses what what FOMC did, then we can see that be the high or low of the week. So it's generally the day with the most volatility, and then the day after. Those are the 2 days that you want to see form the high or low of the week. What do you mean when you say a TPD is a precision candle and PSP at the same time? You'll see. This plays a part with continuation TPDs. What makes a fair value gap more likely to hold more than once or twice? The narrative. And also the strength in assets. On the new core content lecture, how come there's no time frame alignment between gaps and TPDs? Because that is the continuation model, which you guys will get. How can we improve our read of price on the weekly cycle in order to navigate the week more clearly? Starting out, knowing what days are likely to be more probable and have more volatility, and also having a weekly accumulation form and then seeing an SMT. That will be your highest probable. Once you have a weekly accumulation form before news, it becomes easier. How do you treat FOMC days? I personally do not trade them unless I already have had a position open earlier in the week. Same way with NFP, or not NFP, it was CPI. I remember I told you guys, I said, if you had a short position up here, because we expected to see this in the drop, said if you still had a short position, just move your stop closer into profits in case this happens. Because whenever this happens, if you still have a position open, your stop will not be respected at all. It's going to blow through, and then slippage is going to take it, and then you could take an unnecessary loss. If on Wednesday we get a daily cycle SMT and we're at a 15-minute FVG, all before news releases, would you say that that's tradable? If not, then what if it is a 1 hour FVG? As long as there's SMT behind it and there's a FVG, then more times than not you can expect it to hold. Is there SMT divergence in the actual news folders in terms of numbers of news folders for each day? Also, will we get the cycles for each news folder? Yes and yes. Because news folders correlate to cycles. When calculating weights for gaps, and there are overlapping FVGs on nested timeframes daily, 4 hour, 1 hour, how do you assign values to all these gaps or just the largest ones? Gaps that overlap each other in terms of timeframes are higher probability compared to if it's just one gap. So you would see that as more and stronger. Which month or quarter has the best price action of the year? Probably September and October is whenever it gets, well, not so much September, but the end of September and then October. October is probably my favorite month to trade. That month tends to be nice. But Q4 and Q3, those are like the second half of the year is a lot easier. And you'll notice this pattern that the beginning portion of whatever you're trading is the most difficult because you have less information. But once you have more information and you have more to work with, it becomes a lot easier. And that's exactly what I'm teaching you guys to do. Because every single week we go look, the economic calendar. Okay, we expect accumulation here, wait for that. Okay, we know Wednesday has the expansion. So if price tips its hand before Wednesday, then boom, you already know. Wednesday is likely to expand in that direction. But anyways, I think we're going to wrap this one up. Hopefully you guys found this one insightful. I will speak with you all again Tuesday night in the pre-recorded lecture. So is everybody caught up on what we'd like to see? You think today's weekly gap will be hit? Yeah, this gap isn't going to stay unfilled forever. All right, I will speak with you all again Tuesday night.